once you can push through that fear of the unknown, I think that's huge, because doing the bigger deals allows you that scalability to grow your business and not use up all your capital, which was the really limiting factor with single family and even small multifamily.
Hey guys, it's Whitney. I wanted to take some time to introduce you to my good friends over at PassiveInvesting.com. They're a national private equity real estate firm based out of the Carolinas. They focus on acquiring institutional quality apartments and self-storage facilities. They do this with private accredited investor funds. They have a portfolio of over $700 million in assets and control over $250 million in equity from their investors. PassiveInvesting.com makes it easy for you to start investing in real estate without all the hassles. They even have an average 62% repeat investor rate in each offering they put together. They even have a real estate debt fund that offers hard money loans to local fix and flippers across the U.S., which currently has a 0% default rate. To help you learn more, they've put together a free passive investor guide that outlines the 7 red flags for passive apartment and self-storage investing. Visit PassiveInvesting.com/red flags to download the PDF now. That's PassiveInvesting.com/red flags. This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest, Colby Fryar, and he's a multifamily investor. He's located in Tucson, Arizona. He has a background in civil engineering and construction management. And he started in single family homes, but then I think he got to 6 single family homes. And like the next year, he was like well over 100 units and very quickly. And I love this story. And just we go into numerous things. He has a passion for finding deals and underwriting and building teams. And he's going to share a couple of key things I think that could be very beneficial to you, the listener, whether you're raising money, whether you're looking for deals. He builds teams and he's daily working on that. And just a few things he mentioned could change everything for you, I think, if you would implement these. And then also even a book that he read that I'm going to try to read because I feel like it could be so helpful to so many people I talk to as well. You're going to learn a lot from him today. Even a deal that he did that would seem very risky to most people, but he hung in there. And I personally believe he is going to have a ton of value there to create because of the willingness to push through some hard things around a deal that would seem risky for most. Colby, welcome to the show. Honored to meet you. I'd read a little bit about you this morning, a little bit more about your background. And I think your background is something that I think a lot of the listeners are going to be able to relate to. And oftentimes, your background in civil engineering, I know so many engineers that become investors passively and actively. It's neat just the mindset behind an engineer and that how that's applied in so many ways in our business. It's really neat to think through that a little bit. But I'd love to hear a little more about your background in engineering and how you've moved into real estate, maybe why, and let's talk about that a little bit. But then I want to move into a few of your superpowers that I've read about and you and I have even discussed that I feel is going to be very helpful to the listeners.
Awesome. Thank you so much for having me today, Whitney. I really appreciate the opportunity. Yeah, so my background's in civil engineering, and I've been a civil engineer. I'm a civil engineering manager now, and I've been a civil engineer for over 20 years. About 5 years ago, I came across a book called Second Chance. That sort of changed my whole trajectory from that point forward. And I actually started thinking about quitting my job, and I started looking at a lot of businesses and franchises, did a lot of research and figured out pretty quickly that to start a new business was not something I could do on the side. I had this thought in my mind that I could still work my full-time job and then have this side business. And everybody I talked to was running these businesses full-time, and the ones that were successful. And so I sort of came back around to real estate, which we had been investing in some real estate, some single family properties. But it sort of consolidated in my mind, hey, this is the focus we need to have. And so we bought a few Burr properties in Alabama. I actually started with a couple of turnkeys. And with COVID, things sort of dried up and we weren't finding the deals. And I had been looking at multifamily, but it was at that point I said, you know what, multifamily is scalable. You could grow it. maybe I won't have to use all my capital like I'm doing now. And so that's when I got a mentor and a coach, and it's just taken off since then. 136 units later or so in about a year. It's just been a heck of a ride. And I just love getting up every morning and looking for deals and just meeting new people, and the networking part. It's just an exciting time.
It is exciting. And it's neat to hear some main points there that you mentioned. And one I wanted to focus on just for a few seconds anyway was that you read this book called Second Chance. I've not read that book, but I wrote it down just in case I wanted to look it up. But you mentioned that like this book changed the whole trajectory, right, for you, just your thought process maybe about having your own business and being able to do that. And I'm not, maybe you can highlight a little bit about what that book, shared with you that kind of helped, to change the whole trajectory for you. That's such a big deal. Maybe give us just one or two highlights there from that.
Most people have heard of Rich Dad, Poor Dad, and I've read that one too. This one is very similar, but it goes into more about the second chance for people that maybe went through school like I did, thinking that you go to work, you get a job, you invest in 401k, and you retire. And I found out through that book that everything I had basically learned was basically unraveling, and that it's not true that you just have to go to work and get a job. There's a billion other options out there if you have an entrepreneurial mind, which they don't teach you in school. And I actually came away from that book, honestly, a little aggravated, and just felt like we're sort of brainwashed when we grow up, and we have this idea that we have to get a job, and it's not true. And so that opened up a whole new way of thinking. And that's when I really started trying to find a business and find another way.
I appreciate you sharing that, because I do believe there's so many listening that applies to. Maybe this is a great book for them to read. But a big thing I want to ask like the listeners too, like, are you reading? Are you educating yourself? Are you taking in things like this? That, man, like one book changed the whole trajectory here for Colby, and I've had some specific books that have done that for me as well. Some bigger changes than others, that have helped me make just massive differences in my business and life. But if you're not reading, if you're not educating yourself, you're not even allowing room for that, And so I just want to encourage the listeners to think about that. And now just keep that in mind as we go further about Colby's journey here, and just this massive change that he's made in his life and his family, I'm sure. But next, you also mentioned you hired a mentor, coach, and then like you mentioned, like after that, things took off. 100 plus units in 1 year. What was I remember in your bio or something? It's like you started in single family, and then like in a year, over 130 units in like a year soon after, just having 6 single family properties. So speak to, why did you hire a mentor, and what were some key things that happened, either through that relationship or not, that helped you to move that fast to, 130 units just, over the next year after that?
I had looked at the possibility of a mentor back a few years ago, but really held off because I had another business I was working on at the time and developing. And I thought I'd better get that one set up and going. And so I did wait. But about a little over a year ago, I came to the conclusion that side business was great, but it really wasn't going to get me to where I needed to go. And so I came back to the mentor thing. And I think doing that was the best decision I made. And I would encourage everybody to do that. That's where things really started to take off. You've got to be learning the business and educating yourself. But if you don't have that accountability and somebody to push you and to help you through those mistakes that you might make or will make, for sure, that's the key. You got to have that. And that was the difference for me.
What were a couple of those things that make it like such a great thing? What are like one or two things that say through this mentorship that maybe your mentor has done or something that's like made it so worthwhile? I get the question almost weekly, sometimes numerous times a week from people like, oh, should I have a mentor? When should I have one? Or, I don't want to spend that much money, and, those things. Right. And I struggled with those same things early on. And now I could not be more for having some kind of mentor. They're not all created equal, but man, you find the right one, it's so worth the investment. It's just a massive investment in yourself, right?
Yeah, people will invest in school and college, and
that's right,
and spend thousands and thousands of dollars, but they won't invest in something like this. And I'm puzzled by it, and I don't know why, but I think the biggest thing is they challenge you, they push you every day. I mean, if you get the right one, and they know the right steps to take, so they're pushing you in the direction you need to go instead of you trying to decide where to start and which step to take first. They've already been through that, so they can focus you in the right direction. I think that's a big part of it, and just the accountability, keeping you accountable, and that you're doing what you say you're going to do, rather than okay, I'm going to do this, but then you end up waiting months and months and nothing ever happens. I think that's a huge part of it.
I think you said it well, like helping focus you in the right direction, because I think so often you have all these limiting beliefs in the beginning, right? I mean, and really forever, they just change, they grow into different things. And having that person that's like been there and done that can just like look in from the outside and quickly identify that and say, oh, Colby, that's kind of nonsense, right? However they put it to you, it's nonsense. Don't even think that. Like, just focus on this thing over here. And it's like that changing your whole trajectory again, right? And that just changes everything. So I just wanted to highlight that for a second, but I wanted to move then into your passion for finding deals, and you love underwriting and working with brokers, building teams, some of those things you and I talked about beforehand. Speak to this passion for finding deals and kind of what that's grown into and how that's helped your business.
Yeah, so I just love the challenge of it every day, and especially the larger deals. I think when I started out looking at smaller properties like 4 units and 2 duplexes, I just wasn't generating that excitement. And I was looking at these larger deals and looking at the math and the numbers, and that just really got me juiced and going. And I knew that at some point I was going to have to take that leap and just go for those. But how to go for those, that's the huge thing. And once you can push through that fear of the unknown, I think that's huge, because doing the bigger deals allows you that scalability to grow your business and not use up all your capital, which was the really limiting factor with single family and even small multifamily. You just use up your capital quick. You don't form those partnerships, the network, and you're not using other people's money to do it. You're using all your own money, and that can happen very quickly.
Maybe this is a good time too to speak to a little more about going from the six single family to 100 plus, in a year. What were a couple of key things that helped make that happen? That's also a big thing that listeners ask me about often. It's like, man, getting to that first large deal or even the first deal often.
Yeah.
But specifically, a large one or syndicating something, that is so daunting to most. In the beginning, it was to me, like that first one, like you mentioned. But speak to a couple of things that helped you to make that happen so fast.
So I think the biggest thing was when we found our 12 unit in New Mexico, which is not a really big deal, but that's really where we got started. We knew we had to get in the game somehow, and it wasn't the perfect deal, but it was a cash flowing deal, and it was a way to get in. And I think that's huge for brokers to take you seriously, and for investors to start taking you seriously. Is you gotta get in and do a deal. And it doesn't have to be the perfect deal. You might have to be willing to take a little more risk or do something different from the norm to get that deal, because it's so competitive out there, even in the 12 unit space. I guess depending on your market, but it's just really hard to find deals right now. And so I think that was key, and that helped us to be able to look at larger deals, because that next opportunity came right after we did that 12 unit. And we had the opportunity for a really large property after that. That's what spurred the whole thing.
So you had to be willing to do that 12 unit, but that led to a lot bigger things, is what you're saying.
Yes.
And so, speak to finding those deals and how you're finding deals now, in this market, like you're talking about, that's so competitive, no doubt. I mean, we feel that as well. But how are you finding those deals? And maybe how did you find that next deal? What did that look like? But how are you continuing to find deals now?
So that deal came through a broker relationship here, and it was through another office they had in New Mexico. It came to me because I went to school there, and so they knew I was from there and had that background. And so when I sat, I think the key was sitting down and having lunch and getting in front of these people and developing that relationship, which if I hadn't done, and also following up with them week to week, seeing if they had anything available, just being in front of them when this opportunity came up, they immediately thought of me because I had that background there. And so they brought the deal to me. And it was a deal that was on the market and then went off. I think a lot of investors overlooked it because it is a smaller market. But I knew when I saw it was a good opportunity, and I knew the market. So that helped a lot too. And I knew we had to jump on it.
So you had some relationships there too, like for them to even know that you were from that market, for them to know you, think of you, when you'd built some relationships there with brokers, it sounds like, and built a team there essentially. But speak to, I talked about this before the show a little bit, but speak to like the willingness to what you said, like take more risk to do a deal. And someone say, wait a minute, I'm not willing to take more risk, but I think there's different ways to look at that term, right? Or like taking more risk. And there's ways to, make a lot of money in this business because you're willing to see through things that maybe some people would feel are more risky than what other people would as well. Right. But share a little bit about that specific thing. Like you're willing to take a little more quote risk to get to a deal, but it may, I just want you to be able to elaborate on that. Let's talk about it.
Sure. I think there's a fine line there. And I think, with getting your emotions involved too much maybe in a deal, but also being willing to put yourself out there and to do something a lot of people aren't willing to do. I mean, it was a real challenge throughout the process of this deal, finding partners, finding investors. To be honest, this deal, there's a term had a lot of hair on it. It really did. There was no financials on this property, limited data, and the owner was not willing to give us any. Thank God the property manager was a really nice man and allowed me to see the books, which were handwritten, by the way, which was another challenge. But and not much out there. And it's a tougher tenant class that we're dealing with, which made a lot of people uncomfortable. A lot of things there and a smaller market overall. A lot of people are looking at Tucson and Phoenix, Austin, all these big markets, and Las Cruces, where this particular property is a smaller market. And it was really tough to get people involved. But we persisted and kept pushing. And I think that was the big thing, was just the persistence and getting up and grinding every day to find partners and to keep it going. So
all that right there, like, the stuff's handwritten or it's hard to get. And like all that to me says, hey, there could be a lot of value here. Right.
Right.
But you got to go figure that out. And it's not always so easy. Right. Saying that probably makes it sound easy, but it's not. And that's why you found a deal, right? It's because other people were going to quickly shy away from that. Maybe the market for one, but you were familiar there. You kind of had some insight, right? Some inside knowledge about this market for one, but then about this deal, you were willing to hang on, right? You called it hairy, you're willing to give it a haircut. You're willing to go figure that out. Maybe speak to a challenge of gathering that information and how you overcame it.
Yeah. So we had the opportunity to go down there and do our due diligence and visit the properties. And so we got to walk all the units, and the owner had actually told the property manager, do not provide any of the financial data to these people. But I kept asking him while I was there. And
was it under contract at this point?
Yes, it was under contract, but we were in the due diligence period.
You all knew enough to make an offer and to sign a contract, though, at this point.
We knew. Yeah, we did. But thank goodness we didn't have any earnest money hard at that point. So we could have walked away.
Okay.
That was the one good thing. And we had time, which was really good. A lot of deals these days, you don't have that kind of time. I think we had well over 60 days during our due diligence period. But it was a real challenge getting that information. And I just stayed after him and he finally showed it to me. And I took pictures of the ledger book that he had and we got 5 months of information there. And if we wouldn't have had that, I probably wouldn't have got the deal done because I don't think a lot of people would have gone forward. But the thing about it is he got in trouble for giving that to us. And the owner told him, do not give them any more. And that was all we got, even though by the time of closing, we could have had 3 or 4 months more of data. He would not provide that to us. So very, very difficult.
And how long has it been since you closed on that property?
It's been about 4 months now.
Okay.
Since October.
And now you're creating your own paperwork, no doubt about it, and records. What have you learned since then? Like, has there been like these massive things you've uncovered that maybe he was trying to hide, or what have you found? Yeah,
I mean, the biggest thing, I can't go into all the details of it, but there was some personal things going on with it that we found out through the process. Yeah.
Okay. With the seller, you mean like he had some personal issues
that's right.
You don't have to expose on here. That's not relevant. But you found out that, hey, there were things that were being hidden. But maybe it didn't hinder did it hinder the property at all, or was it just some things he personally was trying to hide?
Yeah, it didn't hinder the property. I think one of the lessons we learned was there was some difficult tenants, and we knew we were going to have to clean out some tenants from this property, but we probably should have done our due diligence a little better, contacted neighboring properties and really got an idea of what was going on here, because we're facing some pretty big challenges right now, getting some people out. And one of the difficult things too with New Mexico is they have this eviction moratorium that's been extended on and on. And I think it's finally ending March 1st, but that's been a huge challenge for us as well.
I just think that as you work through that, you'll eventually get these people out, right? I mean, one way or the other.
Yeah.
And I think at that point, like it's kind of only up from there, right? I think you found a deal and does have some hair. And because of that, it's going to be difficult, right? In the beginning.
Right.
But man, the trajectory then of where it can go, I just think you have a lot of value there, right? To be had. Anyway, I think it's exciting. So I wanted to quickly ask you too, because we're running low on time, unfortunately, but I know you have this like sensitivity test that you've talked about, or in the past, and could you share a little bit about that? I mean, especially with your background in engineering, and what does that mean exactly, and how do you use that?
A sensitivity test. That's as far. Can you elaborate on it a little bit?
So no, I saw something that said like about your sensitivity test. Maybe you've mentioned that on another podcast or something like that. Our team found that. And just maybe how you do that in your underwriting, and maybe it's not as relevant as I thought it might be, but I wanted to ask you about it.
Yeah. So, I mean, when we underwrite deals, we really want to look at, the big thing is what are the returns that we can get? So we're looking at over 14% IRR, which is your internal rate of return and your average annual return, over 10% cash on cash return. And so those are our big ones. And then we're doing 3 to 5 years. So refinance in 3 years, sell in 5 years. That's kind of what we're looking at for our deals going forward. Yeah.
So you have these, like it needs to meet these things, or it may not be worth going after. Right. So what about, do you have any predictions, Colby, just for the real estate market, say over the next 6 to 12 months?
Yeah, we actually had I host a monthly meetup, and we were meeting with, we had one of our premier brokers here in Tucson. And I asked him that very question, where do you think the market's going? Do you think a correction's coming? And I think his answer was yes. He didn't say when, but I think everybody's kind of wondering about how compressed these cap rates are and how competitive it is and how pricey these properties are getting. It seems like there's got to be something in the wind coming down the road. But who knows when that could be and how long this run can go. I think the important thing is just you got to be willing to take on challenges. And if you want to do deals, you got to be willing to find, maybe something with a little hair on it like this, because especially starting out, it's so competitive in this environment. And you can't count on things like a correction coming. Just nobody knows when that's going to happen. And I think you just got to get in, because really all we have is right now. So that's what it comes down to.
What about, thinking about that possible or potential correction coming, when that is, and people have thought that for many years now, right? That, it's going to be this year.
Yeah.
Oh, it's going to be this year. Oh, it's, and unfortunately I know so many who said even 5 years ago, you know what, I'm not buying anything until the correction happens. And they've personally lost out on making millions of dollars. Like, I know that, because they held out at that time. Right. But I also believe that, hey, if you feel convicted about that and you feel like that's best, then you should do that, right? You should just stop or hold out, whatever. But you got to just take in as much information as you can and make the best decision that you can, obviously, for you and your investors. But I think you still have to prepare for a potential downturn. And how would you say you all do that? How, that you're prepared for a downturn, given, you're buying a deal in this market right now?
Yeah, I think that comes back to the sensitivity that you mentioned, analysis. I think you've got to underwrite these deals conservatively, and especially in markets like we're looking at, where the growth rates are not quite as aggressive as some of these other markets like Phoenix. You got to be real conservative with your underwriting and project maybe lower growth rates over time, or zero or no growth rate for a couple of years, and just to be on the safe side. I really think that's important. And I'm not sure. I see this aggressive underwriting, and I know that's how these groups are getting a lot of these deals. But hopefully that's a sound approach. I think there's got to be some conservatism built into the model as well. At least if you're being aggressive up front, maybe over time you're tapering that growth off. That would be my advice. But again, I'm not really experienced in a lot of those bigger deals that they're looking at either. So
yeah, I think you got to be conservative, like you're talking about. But rent growth is definitely a place to do that, like you mentioned. And I just think being patient as well. Not being like, actually you mentioned earlier, like not getting your emotions involved is so important. Right? Let's look at the data that we have and really think this through. And not be emotional about making this purchase. And I'll give it an example to the listeners. We made an offer on a property like 2 weeks ago, and we offered, I think it was like 22 or 3 million for this property. It was a little bit smaller property than we typically would purchase. However, we wanted to we liked this property, and we found out that we did not win this property. And there were numerous offers that were numerous, within probably $1 million or $1.5 million of our offer on both sides. Okay. What did I say? It was 21 or 2 million, 22 million. The winning bid though was 36 million. I about fell over,
whoa.
I just couldn't, I can't even wait a minute,
Yeah.
Like if you had told me 25 million, I still would have been like, oh, well, wow, they're paying a lot for this property. But like 36, I don't even know. I told my, and we actually got a BOV, a broker's opinion and value on a couple of properties recently too, and had that same reaction. It's like, what, and so it's like, we're buyers, but I tell you what, we're thinking about being more sellers at the moment,
Yes.
So So I just put that out.
Well,
there.
I'm glad I'm not the only one.
Yeah. I mean, but we just want to be patient, right? I mean, we find a good deal, we're going to move on it. But things like that, like we wouldn't have gone to 25 million on that property, anyway. So Colby, what's your best source for meeting new investors right now?
My best source right now is really just reaching out to our network through the mastermind group that I'm in. I reach out through that. I have my meetup group, which has been big to meet new investors. I also look at LinkedIn, Facebook, and so I meet a lot of people through that as well. Bigger Pockets.
So you're like reaching out to people actively and trying to connect?
Yes, absolutely. On a daily basis. Yeah.
On a daily basis. And I appreciate you elaborating on that. Like you're going to these different platforms and reaching out, you're finding people daily and reaching out, making a connection. Is that right?
Yes. They don't come to you is what I found. You've got to reach out to people if you want to build your network. It's the only way you can do it.
Yeah.
Or at least somebody at my stage of the game. I don't have a big platform. So until I do, that's what you got to do. You got to grind it out. And
that's right. I just appreciate that. Like you elaborating even daily, like you're reaching out on these platforms. You're proactively finding people and making connections. I just want to stress that to the listeners. Speak to some daily habits that you are disciplined about that have helped you achieve this level of success.
So I use a calendar and I really block my time, and I have set goals for the week, and I put those in my calendar every day. And I don't always do what I put in my calendar, but I follow it pretty faithfully. And that's really contributed to being able to get things done and accomplish my goals.
Awesome. And how do you like to give back?
So a few ways. One of the big ways is directly through our investing and our properties. We do have some Catholic charities tenants, as we call them. They're people that are down and out or on the street, even some homeless people, and we're providing them housing through one of our properties. And that's been really huge. We do have, on the offside of that, there is some turnover cost and they do damage the apartment a little more, but through this charities group, we're able to get higher rents. And so that helps offset that cost. But it's just been good to give back in that way and to provide housing for these folks, because the homeless issue is getting really bad in this country. And it's just, and something needs to happen on a government level, all levels.
It is a real issue. And I do, every time I see one of them, I'm just like, I just want to pray for them and even think about helping them personally somehow if I could at the time. But I appreciate you sharing that, Colby, and even just helping us think through that. Like, how can I help instead of just driving by, right? Like really thinking about how could I help that individual? But I just appreciate you saying that, because that's going to help me to think through this even a little more. But Colby, it's been a pleasure to meet you and have you on the show. I love your passion for finding deals and even just underwriting and the teams. We talked about your love for team building a little bit, and then I loved how you even talked about how, like, when I ask you your best source for meeting new investors, I mean you're proactively reaching out on these platforms daily. I think there's a lot of value in that, and I have personally not done that as well as I wish I had. But I love for the listeners to hear that, and know that, hey, you're out here shaking the bushes, right? I mean, you're out here making things happen, and just appreciate you highlighting that. Even the book that you read that changed the whole trajectory for you, hiring a mentor, what that did for you, that this deal that had some hair on it that, hey, some people would say is too much risk, right? But no, you went in and you found out more about it and you kept at it, and you just were willing to go further and do more than most to make that happen. And I believe that that's where you're going to find a ton of value in that as you get through some of these bumps, right? I mean, that's just part of the business, I think, and you're going to learn a lot in the process, no doubt about it.
Yes.
But Colby, pleasure to have you on the show. Tell the listeners how they can get in touch with you and learn more about you.
I'm on Facebook. I'm on LinkedIn. My website's mountainbridgecapital.com, and you can reach me at colby@mountainbridgecapital.com. And thank you so much for having me, Whitney. It's a real pleasure.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the number one resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.